Morning, Steve. I think there's a general pessimism now about where the world economy is going. You see it in what you described about the interest rates, the bond yields. I think that's all overdone, to be honest. I don't think things are that bad. And I think there's too much worry about this problems. We've got a problem with one bank now. That's not the same as a problem across the banking sector. So I think oil is overdoing the pessimism here.
You're saying, Giles, but what I like about oil and what I like about copper and what I like about iron ore is there is a purity about them. It is not just about the shenanigans of the speculators, of the big trading houses moving in and out of it. It is actually about the underlying demand. And if, despite the fact that China apparently is growing over 4% in the first quarter on an annualised basis, despite the fact that there are production cuts out there, these products are still falling. And that is, I hear what you're saying about the pessimism, and I agree to a certain extent. Things don't necessarily look so bad, with the jobs market looking pretty strong especially. And yet, the key commodities globally are falling.
I think after that OPEC move that you mentioned, perhaps the oil market became too optimistic. And in a sense, there's a hangover from that now. So I think it was an overreaction in one direction. It's now an overreaction on the downside. It's not completely pure, Steve, as we all know. There is an element there of speculative holding, which can kind of exaggerate the real economy moves, even in the oil price.
Giles, can I get to one of the other big moves that traders are watching, and this is potentially around the Japanese yen. There is a view that this is the last holdout when it comes to central banks over the Bank of Japan, and as a result we could see there's very cheap money that has been flowing into various quarters of the world reversed as money goes back into Japan. Just set the scene for us, because we've seen a little bit of movement in the Japanese yen just in recent weeks, but still there could be more potential when it comes to movement.
I think there could be a big movement coming up there. How long is the Bank of Japan going to hold on before it does move into following what every other central bank in the world has done? And I really don't believe they can wait very much longer. Maybe it doesn't happen tomorrow, but if it doesn't happen tomorrow, I think the risk that it's going to happen at some point in this quarter is just rising all the time. And of course, when that happens, the yen very likely would move sharply upwards, and I'm afraid there would be an effect on bond yields throughout the world.
Giles, just to bring you back to the banks for a moment here, because I do think as we watch First Republic and try and figure out what the rescue is going to look like ultimately for this bank, or whether it just goes to the wall, it does ask deeper questions about what's still left in the banking system that is going to be problematic for valuations going forward. And Steve made a terrific point as we were talking about Deutsche Bank numbers, about how suspicious the market is about the underlying value of the loan books in these banks. In your notes, you suggest that we perhaps should be increasing our exposure to some banks. Which ones and why?
I think the answer is we should increase exposure to a well-diversified portfolio of the larger banks. I think what's going on with First Republic makes very, very clear that the authorities, if they're going to do anything to help smaller banks that they regard as non-systemic, they're only going to do it in a way that is likely to be very bad for the equity holders, as I think yourself or Steve said a few minutes ago. But for the larger banks, it's not just that I think the authorities are there as a backstop. It's just that I think they are highly unlikely to get into that kind of trouble. I mean, I think, again, one of you mentioned it, the inflows to Deutsche Bank picking up. I think that is likely to be very reassuring to people. And at the end of the day, banks benefit from rising interest rates. I think we're going to get another adjustment back upwards in market perception about where rates are going, and the banks will benefit from that.